The market is currently closed, and the last reported closing price for AiRWA Inc., ticker YYAI, on NASDAQ was $0.0770 on October 24, 2025. This stock has seen a massive price compression over the past year, dropping from a 52-week high around $6.33 to its current penny stock level. Now, the common expectation when looking at a sub-$5 million market cap company like this is that it's just another busted pipe dream, a ticker symbol waiting for a reverse split or a complete delisting. That's the surface-level reality. But the deeper, more complex reality is that the volatility in this stock, which has seen intraday swings of nearly 30% recently, is not just retail speculation, it's directly tied to a highly ambitious, almost unbelievable corporate pivot that most investors either misunderstand or have completely written off. We're talking about a company whose recent corporate actions suggest it is attempting to transform from a niche sports technology business into a player in the digital asset and blockchain space, specifically focusing on real-world asset tokenization, which is the exact kind of high-risk, high-reward theme that attracts massive sudden volume spikes and institutional speculation even at this tiny scale. The tension is palpable. A stock priced at a fraction of a dollar is tied to an asset class that some project to be worth trillions. The question is whether this tiny company can bridge that chasm. In the past few weeks, the price action has been a disaster for anyone holding long-term. We saw a precipitous drop from the low single digits to the sub-dollar territory, a decline driven by a classic cocktail of high cash burn, poor earnings, and an urgent need to comply with NASDAQ's minimum bid price requirement. The daily swings, though, are where the true story lies. On days where volume explodes into the tens or even hundreds of millions of shares, which is absolutely massive for a stock with a float of around 5 million shares, the price will spike, sometimes tripling intraday, only to be hammered back down by profit-taking or short pressure. This is a classic pattern of what happens when a low-float stock catches the attention of traders using platforms like Robinhood stock trading, who are looking for a quick parabolic move, or institutional players moving in and out with algorithmic efficiency. The most recent noteworthy event was an announcement, just a couple of months back, of a substantial multi-million-dollar agreement to help launch a new cryptocurrency exchange focused on RWA. This news was followed by an immense but short-lived spike, proving the market is paying attention to the digital asset pivot, even if it remains deeply skeptical of the company's ability to execute. This is the reality that contradicts the expectation of just a simple failing microcap. The underlying corporate maneuver is an attempt to align the company with one of the hottest themes in global finance. Looking at the broader context of online investing and the shift towards self-investing, the story of AiRWA Inc. is a cautionary tale, but also a template for asymmetric risk-reward plays. Many retail investors drawn to high volatility names might find this stock through a screener on investing sites like the Fidelity mobile app or the SoFi Invest platform, drawn by the huge percentage moves. However, they need to understand that the volume, while high in absolute terms, is extremely concentrated and prone to rapid disappearance. We've seen the company's year-over-year revenue growth in the past 12 months look decent, showing a percentage gain in the double digits, but the net income is deeply negative. The company is losing money far faster than it can generate revenue, which is why the market cap is now barely over $1 million. The high-risk nature is further amplified by its consumer discretionary sector classification under leisure products, a complete mismatch for its alleged new business in technology and finance. This GICS classification lag confuses investors and speaks to the speed and desperation of the corporate pivot. The reality is the balance sheet is fragile, a fact that eclipses any immediate good news. The historical foundation of AiRWA Inc., formerly known as Connexa Sports Technologies, was centered on connected sports equipment and digital services, including licensing patents for augmented and extended reality technology. It's a very specific niche business model, one that simply hasn't scaled to profitability. The technology portfolio includes some patents for metaverse and AI matchmaking applications, which are technically interesting but financially stagnant. The current business model, therefore, is in flux. It's a fading sports technology firm attempting to become a fintech blockchain facilitator. That previous revenue base is shrinking in relevance as management frantically tries to establish a foothold in the much riskier but potentially higher reward digital assets space. The recent activity, including the mention of purchasing shares of common stock by related parties, is a small but important sign. When leadership uses their own individual brokerage accounts to buy shares, even small amounts, it's a signal of confidence, though in this case, given the stock price level, it could also be seen as an effort to defend the NASDAQ listing. Institutions, on the other hand, have largely been net sellers, showing little appetite for a penny stock with such an uncertain path. Now, let's look forward. The future outlook for AiRWA Inc. hinges entirely on its success in the RWA tokenization space. The expectation is that this pivot is a long shot, and the company will fail to gain traction against more established fintech players or dedicated crypto startups. The reality is the RWA sector is heating up, and institutional adoption is accelerating, especially with platforms like Fidelity Investments beginning to explore digital asset custody and trading. If AiRWA Inc. can successfully execute on its announced partnerships and actually get a functioning regulated exchange or platform off the ground, the leverage on this tiny market cap is immense. A market cap under $2 million means any truly positive news could send the stock soaring purely on a low float dynamic. The catalysts to watch for are execution milestones, a definitive launch date for the cryptocurrency exchange, regulatory clarity on their RWA activities, or securing substantial outside financing to sustain operations. The risks, however, are immediate and overwhelming. They include the constant threat of NASDAQ delisting. A company trading this low for this long is under immense pressure to execute a reverse stock split, which often triggers another wave of selling, and a complete depletion of cash reserves. The lack of an analyst price target is telling. For most on Wall Street, this company doesn't register. This is where the self-directed invest online user needs to be most cautious. Relying solely on short-term technical analysis, as is common on platforms with minimal investment help, misses the existential business risk. Do you think the management team can successfully navigate the highly regulated, complex world of digital asset finance and turn this company around before they run out of cash? Comment below with your best guess on whether AiRWA Inc. will be trading above $1 a year from now and why. Ultimately, the central tension in AiRWA Inc. is between a penny stock reality and a potential trillion-dollar market narrative. The common expectation is liquidation or delisting. The deeper reality is a low-float, highly volatile vehicle that is actively trying to attach itself to one of the hottest, albeit speculative, themes in modern finance. The daily stock movement tells a story of extreme short-term speculation, not long-term investing. Whether you're using interactive brokers trading for its advanced features or a more accessible app like SoFi Active Investing, the core principle remains. Due diligence is non-negotiable, and with AiRWA Inc., that diligence must focus almost entirely on the execution of its new, unproven business model rather than its almost irrelevant legacy sports tech segment. The stock remains a high-wire act, where the potential for enormous gains is perfectly mirrored by the near certainty of total loss. This is not a situation for a conservative portfolio utilizing a product like Schwab Intelligent Portfolios. This is speculation, pure and simple, driven by the hope that a microscopic entity can capture a sliver of a huge future market. The price today reflects the market's deep skepticism. but the trading volume suggests a persistent, highly engaged group of traders who haven't given up on the pivot yet. This disconnect is what makes the stock story so captivating to those who follow it. Disclaimer: this video is for educational and informational purposes only and should not be considered financial advice. Always do your own research or consult a licensed financial advisor before making any investment decisions. The content in this video is based on publicly available data and does not constitute a recommendation to buy, sell, or hold any security.